Petrochemicals group Sasol said it expects a full-year output of 7.1 million tonnes at its synfuel unit, slightly down from the 7.2 million projected in March. The company is investing heavily in growth, especially by expanding its shale gas portfolio, with capital expenditure for this financial year seen at 23 billion rand.
Sasol, one of the big guns on the JSE, market cap 222 billion, price earnings 12, dividend yield 3.1. Liston, next come to you first in Cape Town. We'll delve into some of the details in a moment, but broadly the update to my sense, I mean, not much numbers, lots of talk, but nonetheless a good set of numbers, a positive update from Sasol this morning.
Yeah, well, again, I don't think it comes as any surprise. And, you know, the only part is they do a little bit of self-congratulation, saying they've been able to contain costs. And, you know, they have done a few good things that are under management's control. But I think without a doubt, you know, the thing that's really driving them along very nicely has been the high oil price. And we just know that that's, you know, a very good cash flow situation for them. So, yes, I don't think it was a big surprise at all. I guess we'll deal with a couple of the more interesting bits in the update as we go along.
Well, Ron, looking at this oil price, it's sitting at $120 a barrel, and we know that one of the things that got Sasol through the downtime in the economy 2008-2009 is the fact that they put in some hedges. Do you think that they're relooking their strategy when it comes to Brent crude right now?
It's a difficult one. What we seem to have is some sort of consensus out there of oil forming a base somewhere between $90 and $100 per barrel. If you factor in a socio-political risk factor of $10 to $20, you have the current Brent price for the time being.
And we know they are factoring that
yeah,
number.
Yeah, it is in the current share price. So, you know, it's about $90, and sometime in the future, for some weakness in the rand, you've got quite a nice kicker. So from an oil price point of view, they've done exceptionally well. Let's go and have a look at their technology. Sasol is not only an oil counter, it's a technology counter. When we look at the old technology, coal to liquids, which is not under the whole green and clean energy synopsis, we have a major innovation since then, which is gas to liquids. They've made some massive investments in Canada, probably 2 deals, I think, of totaling 3 or 4 billion Canadian dollars all in all. This is going to be the kicker and the driver in the future in terms of Sasol. So what you have in Sasol is traditional business in South Africa, and then your gas to liquids, and then potentially your coal to liquids in places like China, possibly coal to liquids in India, Uzbekistan, and all sorts of other places. So yeah, I think looking ahead, this share certainly has got a lot of potential. Add to that the operational turnaround, where they have been making promises for a number of years, which they haven't kept. They haven't gone all the way there yet, but they seem to be quite far down the track in achieving costs, operational efficiencies, driven by higher volumes and underpinned by very good prices.
Liston, Ron mentioned the Canada, the gas there, the shale gas, very much a significant play for them, a big move there. Still perhaps a little bit small for now, but if we look down the line sort of 3-5 years, that's going to become more and more significant, and I suspect Canada is probably just the first of many shale gas deposits that they're going to look at around the world.
Well, I think the number there was quite astonishing. I think they said 10 trillion cubic feet. So, you know, that was one of the numbers that they did put out. And yes, that is very significant. And of course, you know, shale is another item that will come to the fore. We don't want to get involved, I don't think, in the entire fracking discussion now. But that is essentially similar, because you're going to go from gas to liquids in that situation as well.
The one thing I'm seeing with Sasol is lots of little things, Liston, and I'll come back to you, which are out there. And the other one, I mean, for example, they talked about their chemicals, sorry, not the polymers, which they say there's still an oversupply situation, but they're expecting that to start changing as early as 2012. That's going to give them another kicker. They've got their joint ventures, India and Uzbekistan, where they're at feasibility stage, and they're going to take it that last little bit. A lot of things that are sort of really down in the pipeline, but really going to be nice little kickers for Sasol if we're looking forward a couple of years.
Well, yeah, I think, you know, the interesting feature for me out of all of that is, you know, how widely spread they have become in their search for somewhere to go. And it's going to be a problem, I think, at a later stage. So just the points that I thought were interesting. And again, I always look for, the use of the words. Maybe I'm reading too much into it. But one of the paragraphs reads, we are maintaining our discussion with the government regarding the fuel formula. And another one, they say, we continue to be positive towards our original routes of coal to liquids. So it just strikes me that there's some debate there that I may not be entirely part of, and they're probably just saying something there as a shot across the bows. But the only point, and I don't want to start a rumor, but if the board of directors of Sasol, for whatever reason, and it could happen over time, finds that more of their revenues are coming from outside South Africa than from within South Africa, we might actually find Sasol PLC. Now, the joke of that is, of course, many people don't even know what Sasol stands for, but it stands for South African State Oil Company. So if the South African State Oil Company becomes a PLC, that will be a bit of a joke.
Well, just keeping in mind, South African State Oil Company was in fact brought to the fore because we had sanctions against the country, and it was, of course, trying to mitigate some of the issues that could have happened. Remember in the 1970s or so, Ron, I'm sure it was very interesting looking at Sasol and how it's grown so much since then. You mentioned the technological aspects of the company. Where to from here? Because you see the likes of Canada, the shale gas story. We know that there's a lot of opportunities here in South Africa. Do you think they can get it right? What challenges could come to the fore? Do you think that they've gotten the formula correct?
I believe so, Eleni, yes. I also agree with Liston in the longer term. There's going to be massive growth offshore. There still is a lot of growth potential in South Africa, but the drivers in the longer term are certainly offshore. You're going to see some massive expansion there, and possibly maybe another listing elsewhere to fund that growth in the capital expenditure.
What about, Ron, a potential takeover? I mean, 220 billion, what's that, about $30 billion US. I'm thinking a Shell or a BP, it would be a big bite for them, but someone who rather than, as you said, they're a technological company, rather than trying to compete, just buy. And the big issue perhaps is that PRC and IDC own almost 21%, and that's effectively government, and that's almost a blocking vote.
Simon, a strategic asset for South Africa, that is a no-no. You saw what happened with Walmart, and that's a small fish. This is a big fish.
So do you think government will oppose any such kind of move?
I can't see that happening.
Back to the international, I mean, the Oryx GTL in Qatar, which had some problems, delays initially, and for the main number, they're up to 32,000 barrels a day, 99% of capacity. They certainly, in many senses, that was their shop window. They went to the world and they've put it out there, it's working, and now there are other issues, India, Uzbekistan, they've got their shop window. They're just going to accelerate and amplify this.
Absolutely. They've paid their school fees. There were major technological delays in Qatar. They seem to have got that right. So let's go on to the next stage where they keep rolling out in other countries now. This is they've shown they can be successful despite there were some challenges in terms of new technology.
Liston, if we do see the market falling apart, if the US debt ceiling is not increased, and therefore we'll have double dip and we'll have a recession again, and we see oil prices plunging to $35 a barrel, where does that leave Sasol? Because we know that at the end of the day, the technology that is behind a lot of the processes that are in place when it comes to gas to liquid or coal to liquid plants, it comes at a price. Do you think that they need to have that protection? Would you say that Sasol still needs to look at that kind of strategy like it did prior to the crisis in 2008?
Well, I think any board of directors must have a look at it. And one of the problems they've got, and I remember it from one of the times before when they put in a hedge, is that if the oil price rises after you've put in your hedge, you have to bring that to account in your books as a loss. Now, the year end is June. I don't think I would be putting in something immediately now and then find that suddenly, the oil price goes up $5 a barrel ahead of it. But at the beginning of the new year, there might well be a different thought on it. And again, you don't have to do all or nothing. You can do it in, in phased tranches. But for that, the board of directors would need to be fairly convinced that the oil price has every chance of going down. But always remember, when you cover forward, you're covering forward generally at lower prices than the current one, because there is this expectation of it coming down. So it really is a function of what price you think you will get when you get to the number. And if the forward is at $100 a year from now, and you're looking at 120 now, you're saying, well, I'm not sure that I want to do that.
Yeah.
So I do believe that, you know, they have to take advice on it. They have to look at it. It's only part of risk mitigation, and I think that's obligatory for any board to look at.
Okay, Liston, hot or not, would you be buying Sasol?
Well, I like the company. I just think it's got a lot of question marks, and part of it is the fact that they tested 4 different places for oil, and they all came up empty. Then they got Mozambique, and they say, yes, no, they have some hydrocarbons there. They don't say how big it is, but they're positive on it.
Yeah.
So I think, you know, we're right that Qatar is coming right, and various other things are coming right. But I think we pretty well know what Sasol is about.
Yeah.
It was $270 a year ago. It's $350-ish now. You know, it's put on quite a goodly bit. I suspect there's a little bit more in it, but I'm not sure that it would be that hot that I would rush for it right now, especially with the spectre, whether it's real or not, of a slowdown in the world.
So just to be clear, listen, not hot.
So
Sasol,
I'm
not
saying
hot.
no.
Not hot.
Not hot.
Amazing. Ron?
I see it as being hot, certainly. In terms of the downside of the oil, what has changed since those big days in terms of hedging? Emerging market growth. China, India, and the rest of the emerging markets are here to stay. The demand for oil, as you see greater and greater urbanization in those economies, is going to underpin the demand for oil. Yeah. I would think on a 2-year view plus, I would suspect we're going to see a growth of 20%, maybe 30% from the current base in the share price, on the basis in that period that we do get some weakness in the rand. So, you know, once US interest rates start going up in the next year, 18 months or so, we could well see the rand starting to show some modicum of weakness, which would help.
So hot for you, Sasol?
To me, it is hot.
Allocating new money
levels.
at these levels.
Yes, yes.
Buy and hold.
Yes, absolutely.
Sasol, absolutely hot. A little expensive at $350.
Quality company, wouldn't you say? That's what most
No, but that's it. I mean, absolutely quality company. And I have a view that if I own a car and I've got to put petrol in it, I've got to have Sasol. Because when my petrol costs more, my Sasols are worth more.
Okay.
Buy into weakness.
Buy into weakness. Listen, any last comments from you on Sasol? Would you buy and hold for the long term at least?
Oh yeah, I think it's you know, it's a core holding in most portfolios. But you know, just for me to rush out and say, gee whiz, it's $350 today, I must go and buy it. That's what I call a hot stock. I'd say no.